Hi, here are 5 things you need to know when considering getting a Spanish mortgage as a non-resident. My name is Marc from Fluent Finance. I'm here with Stuart, a senior consultant here. So, hi Stuart.
Hi Marc.
So tell us, what are the 5 things that you would suggest that people need to consider?
When I speak to a client, one of the first things I always get to within the first few minutes of a conversation is what cash have they got that they can put into a purchase? How much are they willing to put in themselves? 80% of the clients we speak to, what decides what they can buy to a degree is the amount of cash they can put in. The deposits in Spain are very high and the fees in Spain are high compared to most of the rest of Europe. So the cash that they can provide is going to be a deciding factor on what they can buy.
So what you're saying, they're going to have to put a bit more money than they're accustomed to in their own country?
Very, very much so. As a rough guide, we always say to clients, when you're looking at a property, consider that you need getting on towards 50% of the value of the property you're buying, you're going to need to provide in cash.
So 50% is quite a lot. Is that including taxes, closing costs?
Everything. We take into account everything. Lawyers' fees, banks' fees, notary fees, land registry fees, valuation fees, all the taxes. When we calculate what the price of property you can buy at, we will take into account everything.
So you will ensure that a client is fully aware of how much of their own capital they need to bring?
When we have the initial conversation with the client, we will go through some approximate figures over the phone, then we will get a little bit more in-depth and precise figures from the client. From that, we will send them an in-depth report, and it essentially says, this is the price of property you can buy at, this is what it's going to cost you a month, this is the amount of cash you're going to need to put in yourself, and here is all the documentation you're going to need to provide to be able to get that mortgage.
So after speaking to you, they'll have a very clear idea as
to at that point they know exactly where they stand and exactly what they can do.
They need to go into their own pockets, right?
Exactly.
So the second thing is what?
Income. All lending, gone are the days of the self-cert mortgages. You can't get them here, you could never really get them here, but you can't get them in the UK, you can't get them in the States, you can't get them anywhere now. All lending is based on income. And the affordability criteria in Spain is much tighter than you would get in a lot of other countries. So we get a lot of clients come to us who say, well, I'll find a property first and then I'll come and get the mortgage. I won't have any problem getting the mortgage. Because of the way that Spanish calculate affordability and because of the factors they take into account that lenders in the UK or the States or Holland don't, suddenly these people who are convinced they've got no problem getting their mortgage for 300,000 or whatever, find they can actually only get 180.
And why would that be? Because they, let's say they've got lots of income, lots of demonstrable income.
But a prime example is buy-to-let properties. In the UK, in the States, if you've got a rental property, as long as it's self-funding, the banks completely ignore the debt. In Spain, they will add all the debt from those buy-to-let properties onto your personal debt. And to be fair, they add the rental income onto your income, but because their affordability ratios are much tighter than other countries, when you've got if you own 4, 5, 6 buy-to-lets, all of that debt added onto your personal debt, it throws a massive spanner in the works.
Okay, so what about personal loans, car loans, anything like that? Credit cards?
All of those are taken into account. All of those are added into the equation. And again, the structure for the Spanish banks of how they look at debt is much tighter than it would be in the UK or the States.
But they don't consider things like your gym membership or anything like that, do
no. I mean, you apply for a mortgage in the UK, then there's a 12-page fact find, and They want to know what your gas bill is, what your dog food bill is, what your shampoo bill is. The Spanish banks don't care about that. All they're interested in is how much do you pay in credit? How much do you owe in credit? How much do you pay in credit?
Okay. What about the age of the applicant? How does
That's another major factor when buying a property in Spain. I've got an application at the moment for a Canadian woman who's 68 years old. For her in Canada, it's a walk in the park to get a mortgage. Here, because of the restrictions, Spanish mortgages have to finish before age 75, before your 75th birthday. So as a 68-year-old, the longest mortgage she can have is 6 years. A 6-year mortgage means very short term. That short term pushes up the monthly cost of the mortgage. Spanish banks calculate what you can borrow based on the monthly cost, not on the amount you're borrowing. So it restricts, the shorter term restricts your ability to borrow. So age is a big deciding factor.
Fair enough. And is there a way around that? Is there a way of extending the term, or?
You can, in this person's situation, for example, I asked her, did she have children, younger children in their 30s, in their 40s that were working, that would be willing to come on the mortgage with her, because then we can average the ages or get the bank to take
the banks will consider that.
The banks will, as long as the child is earning, then they will average the ages or take the younger age to give a longer term.
Perfect. Okay. And do they take into account what a client does for a living, its history?
Of course. If you're self-employed, they're going to want a minimum of 2 years history of that. But even if you're employed and payslips and P60s, it doesn't necessarily mean it's a walk in the park for you. There are industries the Spanish banks just aren't comfortable with and don't like. So what you do and where you work is also an important factor.
So what you're saying is the Spanish banks would like to know about the client, their history, what makes
the Spanish banks same as it, and the Spanish banks don't have access to credit search you from Spain. They don't have access to your tax office. They don't have access to your social security office. So what they want to do is build a complete picture of your life. They want to build their own picture of what you are, so that they can assess you as what risk you would be to them.
That's right. Okay, great. So there's 5 things that we've covered. Just the last thing, what's the maximum lending to a non-resident at the moment?
Absolute maximum is 70%. The banks will lend up to 70%. However, if everything is not perfect for them, they will reduce it to 60%. Mostly when we initially talk to clients, we quote at 60% because the client has to have a perfect profile to qualify for the 70%.
So what non-resident mortgage applicants need to consider, they need to understand, A, you're going to need to put a large amount of capital, of your own capital in. B, the banks will assess their capacity to pay, obviously, the affordability. They'll look at their income, they'll look at their expenditure, they will include the Spanish mortgage into that, if that ticks the box. They will look at their age. Is that right?
Yes, very much so.
So the income, the debt situation, the current liabilities, the age, and also a bit about them and their story. Their story, is that right?
Completely. The real deciding factors: how much cash can you put into the purchase yourself? How much income have you got? How old are you? What do you do for a living? Let's build a picture of you. From that, they will decide what they will be prepared to. As I say to most clients, my advice is, if you're coming to look at property in Spain, apply for the mortgage first. Get the mortgage approved before you start looking and committing to property. When you find a property in Spain and you commit to it, you have to put down quite a sizable reservation to take the property off the market. That reservation is usually not refundable. So you really need to know before you choose your property and put down a reservation, exactly how much the banks are going to give you on a mortgage.
Perfect. So the general consensus is you're able to do some homework beforehand.
Yep.
Make sure you hit the 5 targets, 5 requirements. And Fluent Finance Abroad is here to help if that's something of interest. Thank you.